vlog series of COVID-19 in credit. I'm Thomas Maiden, Head of Credit and Analytics at Principal. In our series of COVID-19 in credit, we have been looking at how the COVID-19 crisis may have affected credit models and may affect credit models going forward. In our first episode, we looked specifically at bureau scores. In our next episode, we looked at acquisition and originations models. So if you've missed them, feel free to go back to our video feed on YouTube and find those videos there. In today's episode, we're going to be looking specifically at collection scorecards. There are very many different collection scorecards, so we're going to go through each one of them and understand how the crisis may affect the models right now and going forward. As a reminder, in each case we will be looking at how the models will be affected over different periods of time. We've divided the timeline into three distinct parts, there being the shock period. This is the first 3 months of the crisis since lockdown. Roughly 3 to 6 months thereafter is the immediate aftermath. That's the second period. And then the third period is the long-term aftermath that we defined as roughly 6 to 24 months, during which we will still feel shocks of the COVID-19 crisis. So how do we think the crisis may affect collection scores? Well, whilst many lenders are using behavioural scores for the purpose of risk segmentation and collections, more advanced lenders will be using a host of scorecards and models in the collection space. In this segment, we'll be going through each one of these scorecards to understand the impact that COVID-19 might have on them. Before we look at the models, it would be worth understanding what the impact of the crisis has had on the collections environments. During the shock and lockdown period, we've seen some of the following happen. I'll talk specifically about South Africa, but many other countries have experienced similar trends too. So the introduction of payment holidays has been widespread. While some lenders have not even aged their book in April, others have gone about issuing selective payment holidays to those in good order or perhaps in early arrears. Secondly, many lenders have reported softening their collection activities and being more empathetic to the South African consumer. We expect this to continue for another couple of months. Next item is smaller collection teams. In the early days of lockdown, collection call centres were essentially closed. Whilst call centres scrambled to enable work from home for some of their staff, it was reported that the staff contingent collecting was a lot smaller. I think in many cases it was roughly 30% compared to the normal. All this meant limited collection activity across the entire credit book. There's also been a focus on payment channels. Retailers enjoy consumers coming into their stores to pay, as this increases the opportunity for future sales. But as retailers and other lender branches were closed, consumers had to use other channels such as EFT, online, supermarket, and ATM have all been pushed as alternative payment channels. It's also worth chatting about the interest in self-service collections, that is, the utilization of chatbots for the purpose of statement checking and capturing promises to pay, as well as facilitation of the payment. We've certainly seen an uptick in interest in this channel over the last few months. All of these points have contributed to a different credit environment. Now let's look at the models. Propensity to pay. That's the probability of a successful payment. Probability of default. That's the scorecard for early stage collections to predict the probability of eventual default within 6 or 12 months. Probability of roll. That's the probability that the account will miss the next payment and roll on to a more severe state of delinquency. Payment projection score. This is used for the late stage accounts and is the amount that is expected to recover over the lifetime of the loan. It's often discounted too. Right person connect. This is the probability that we will receive a contact with the debtor. Right time to call. This is a number of models that culminate in giving the lender the right time to call the debtor. Preferred installment. This is the preferred installment that should be negotiated. Optimal settlement. This is for the problematic late stage accounts with smaller balances and gives the optimal settlement amount that may be offered. So let's go through each of these models. The first one, propensity to pay. What we will see here is that the models will overpredict propensity to pay initially, and then, during the immediate aftermath, the scores will drop. Your yield forecast will likely overpredict yields during the shock period. Probability of default. These are essentially standard behavioral scorecards. These will underpredict likelihood of default during the shock period and into the immediate aftermath. At the end of the immediate aftermath, we're going into the long-term aftermath. These scores will drop, representing the stressed population. If there is a bounce back during this third period, this will result in the scorecards weakening for a time, i.e. not predicting as well. We're expecting a similar pattern with pre-delinquency scores too. Probability of roll. Severe operational changes during the COVID-19 lockdown will likely see higher roll rates than expected as fewer delinquent customers are contacted. The models will therefore overestimate probability of payment or underpredict probability of rolling. We expect a similar trend with models predicting the probability of breaking a promise to pay. Next, payment projection scores. This score will deteriorate over time and probably overpredict during the first 3 months of the crisis. Right person connect. During the initial period, probability of connect is likely to be higher than expected as people are at home. Right time to call. These models here will predict better than expected, meaning that there are more periods when an RPC is likely as people are. Preferred installment. Those with traditionally stable incomes may have instability during this time. Depending what variables are used and the taking into the effect of payment holidays, we anticipate that these models may not predict well with many debtors. Optimal settlement. With reduced income and cash on hand, these models may overpredict the optimal settlement amount. I think the one scorecard that we've skipped here is the bureau score, which is frequently used within the collection strategy. We haven't covered it here because we covered it extensively in the first video, and we looked at some of the bureau variables too in the second video. So if you want to go and get our view on what we expect to happen with bureau data and bureau scores, have a look at those two videos. In summary, be aware that your yields will overpredict in the initial periods, and then it's likely that they will begin to predict more accurately, albeit with much lower yields than the period prior to COVID-19. Expect a large increase in accounts entering collections post-payment holidays, and that these accounts will be harder to work. You may need to address your capacity management over the next 12 months and potentially look to external debt collectors to help out more with the overflow. And the final point that I'd like to make is that, as many of you will know, Principa have extensive experience in the collection space, offering both services as well as products. So I thought it would be a good idea just to mention some of them very quickly at the end. The first item is collection health checks. These are current state assessments on your credit book as well as your operational environment. Then managing collection scorecards, including machine learning models. Next, data-driven collection strategies. Operational strategies. Our collection management system called CollectSmart that's been deployed in 17 different countries. Our collection self-services bot, Atura, our yield predictor tool, Prosperity, our collection virtual assistant, Agent X, and our collection call center training tool, Wisdomy. So if you would like to know anything more about our products or services, or if you would like a no obligations collection discussion with our highly skilled consultants, feel free to get hold of us either via our website or on the email address info@principa.co.za. Thanks very much for watching. Remember, you can subscribe by clicking the subscribe button, and there you will keep abreast of any new videos that we create, including further videos within this series. Feel free also to comment below or email us on that email address. If we get some great questions in, I may even do a Q&A session, who knows. Anyway, I'm Thomas Maiden. Until next time, goodbye.